Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are talking about, look at the news. Obviously, it's going to be stock market, finance, wealth, and commodity related, maybe even packed up all into one. I'm going to give you my financial opinions as we go. And if you want to follow me, it's finding_finance. Boom. And if you want to join our community, it's finding-value.com, where we talk about individual stocks and how to play this commodity bull market that is coming and that we're in. I should say that we're in it, and the big move's about to come. So JC says, China's solar exports would be much higher, but the country's installations are running up greater than 100% year over year. Solar companies have drawn down silver inventory, and there's about to be a massive restocking cycle that will rapidly sap critically low inventories. Checkmate approaching, and that's for silver. I am still a silver bull. I'm a platinum bull. I'm a gold bull. I'm a bull of many lights, but I wanted to touch on that for that one. And just an FYI, Chinese solar exports went up 29% year over year from March to April. So runner up, this is what Ferg says. I love it. I love it, guys. We got to rub this stuff in. Runner up is South Africa. They are making great progress in slashing emissions and just need to push blackouts a little harder to meet their 2025 target. So South Africa beats climate goal as blackouts slash emissions. Emissions falling ahead of the 2025 target. Power plant breakdowns are reducing industrial activity. That's all we need. We just need a lot of blackouts. We need to make a lot less stuff. We need to crash the economy. And guess what? We'll be in climate heaven. Perfect. Now, this guy, this is funny here, this Gregor. He says, crypto's dumping harder than me after Taco Bell. Come on, guys, admit it. That is kind of funny. I haven't, fun fact, I haven't had Taco Bell for over 10 years. There's a fun fact. So, Logan, so I didn't really read this. I just looked at the chart and said, wow, this thing looks like it's ready to, it could bounce here. Input costs fell, lumber versus housing 2023 call failed. For the right reason. Forward data started to get better on November 9th video below. We'll explain the rest. A lot of people look at the lumber and they look at the lumber to gold ratio and they'll say, oh, this thing's crashing. It's totally going to crash. Oh man, your housing market is totally screwed. I'm like, guys, look where we're coming from. This 2020, we shut down production. We had this supply-demand imbalance, and it just totally wrecked the lumber price. It's not even a good indicator, in my opinion, anymore because of all this. So coming from this level up here downward is not an indication that the market is softening necessarily. It could be an indication that supply is catching up to a supply-driven price move. But it doesn't mean that the demand is just gone. That works great when you're in equilibrium. Equilibrium means, so I can just make this analogy here. Equilibrium is like you're driving a car on the highway and you're looking at water temps and you're trying to determine if the driver was speeding, and that's the only thing you could see was their water temperature. If someone was really going to get on it, a lot of the times your water temps climb as you push the car harder and harder. That is a possibility. Doesn't mean it will happen. If temps climb like dramatically like this can mean that your thermostat failed. And then they'll say, oh my God, look at that. The car can't handle it. It's like, no, you just, the thermostat that controls your water, the coolant temperature, it just broke. And then you replace it and it goes back to normal to where it was before. It doesn't mean that your engine was necessarily bad or it was blown up. It was just one bad failed component. It was one bad supply chain component failure that brought this up here, and now we're starting to come back to equilibrium. I don't think that means that the housing market is completely screwed. My take on it, at least. I'm sure others will disagree. Jory says, a couple the demand outlook with the supply one. Production growth coming from U.S., Brazil, Guyana. All Atlantic, needing to travel 2 times the distance to Asia versus Middle East oil. Tanker fleet capacity won't grow until 2027, the earliest. If, and a big if, ordering ramps up. So this is oil supply changes for select countries from 2022 to 2028. That's looking forward. 2022 supply, US, Brazil, Guyana, Saudi Arabia, biofuels. These are the ones declining: Angola, Mexico, Russia. Others, 1.5. The 2028 supply, 105.7, is what they've got in terms of million barrels per day. They have US increasing by 2.6 million barrels per day. I think Brazil and Guyana, I think these can actually do it. They're just not big ads. That's all. Coming on down, we've got the average 30-year fixed mortgage rate slips to 6.95% prior to the FOMC announcement. That's where we're at there. Let me go here, scrolling down. The IEA, oil demand to grow by 6% between 2022 and 2028, reaching 105.7 million barrels per day. What about the supply? What about the supply? Good question. We don't know where that's all going to come from. And that's 2028. Everyone seems to remember the dot-com peak in 2000 and the trough in 2002. But so few of you remember the 40% bear market rally after the initial dump. So you get initial dump, and then you get this rally up there, right? That is where I think we're heading, guys, right in this area. It says, if you want to make cool chart, layer this over the NASDAQ from 2016 to now. It's terrifying. And yes, it's going to rhyme, I think. It may not be perfect, but I do think that we are coming up. We're putting in what's called a bull trap for the technology stocks. For commodities, we're putting in the bear trap. These move basically opposite of each other. Now, there could be a time where these do link up. And I will say this too, we could even put in a higher high. It's possible, depending on where we're at in this commodity bull market. We may be so early that the stimulus money came through the system and caused a ripple effect, we'll call it. That stimulus money working its way through the system, but it may not be self-sustaining. It may just be a ripple or a move that comes in. Maybe we get another high out of it. I don't know. And then maybe the crash occurs later. But we'll see. Crude inventory soared, only they didn't. What soared was the DOE's adjustment factor to 1.9 million barrels per day from zero last week. Once again, the entire increase was in some Excel spreadsheet, at least according to Zero Hedge. And this is the DOE oil adjustment factor that keeps going higher and higher. Paulo Macro says, I love this. Amid lackluster fuel and petrochemical demand in the country, ripping oil imports because product demand is in the toilet. Got it. If your head is hurting, you're not alone. China increases oil import quotas 20% on a year ago. And we're getting mixed signals in the news with all of this demand and supply in oil. I would say especially from the demand side. JC says 978,000 ounces of silver extinguished from the COMEX vaults today. The silver squeeze is about to accelerate massively. With supply disruptions in Mexico complementing a surge in China's solar demand, meanwhile, Powell sounded concerns about CRE and the banking sector. We did have an increase. This is EAI weekly oil and product inventory report. Crude oil up 8 mil, Cushing 1.5, gasoline 2, and distillates 2.1. I will say I am doing my job by burning a lot of gasoline. I did take the car up to the track a week or two ago, and I am driving all over my daughter, who is going to all these practices for cheer, competitive cheer. It's amazing. So Ferg, it says this is one hell of a chart. Demand reduction is required to the tune of 69% of the 2019 level of Russian gas imports. Gap could be filled by energy efficiency and sufficiency measures. I want to know what these guys are smoking. In reality, it'll probably be coal or hopefully nuclear. This is imports from Russia in 2019, 190 billion cubic meters. Decreases of European production, including Norway, is 33. Diversification of supplies, 60 billion cubic meters. Gas decarbonization and required demand reductions by 2030, 131 billion cubic meters. That's pretty crazy in terms of efficiency measures that need to kill that amount. Keep in mind, inventory levels in Europe are not properly sized for the flow rates of gasoline. Now, I should say natural gas, not gasoline, natural gas. So the flow rates, even though you have a full inventory, if you have a harsh winter or you have a harsh summer where you have a lot of demand for natural gas, that the inventory may not be properly sized for the flow rate. Just keep that in mind, and it's going to impact the price of TTF Dutch gas and all these European gas prices. It'll be extra sensitive and very volatile. JP Morgan, world oil demand is set to average 101.4 million barrels per day this year, almost 1 million barrels per day above 2019 and a new record. So I guess oil demand is hitting new records. Kathy Woods definitely not on top of her game. She said from 2020 that we were going to decline precipitously, and that oil was never going to get above something like $20 or $30 ever again. Fed wants to raise rates because of inflation, but they cannot raise rates because of debt payments. Either way, it's a win-win for gold, as higher rates add systemic risk and rate hiking pause mean that they will show they are not serious in fighting inflation, which they never were. Yeah, they're backed into a corner, and they can't raise rates because it's going to increase payments. And they can't fight inflation because it's going to increase the debt payments. So they're going to let inflation run wild. This is going to be cheetah style. So it's going to run wild, and gold is going to be a better factor. Silver, platinum, oil, all these inflation-sensitive assets are going to be golden during that time when they let it run. So Tavi says, let's go in here. He says, this appears to be completely off the radar, but despite the recent melt up in mega caps, Brazilian equities are now officially outperforming the S&P 500 year to date. It's worth noting that this was also the case in 2022. While the recent excitement around AI has captured most investors' focus, the shift away from historically expensive U.S. equity market to an undervalued, commodity-led economy continues to take place. I completely agree with him. I think Brazilian equities look fantastic. This is a ratio chart, Brazilian versus US. It is very cheap. It is bottoming. It's an inverted shoulder, head, shoulder. This looks really good. It looks very good. You can even throw a downtrend line on here, and it's about to break it. So I think that emerging markets, specifically Brazil, would be one to look at. My opinion. Here's one. If you make $130,000 a year, how much should you spend on a new car? I am going to change your guys' viewpoint on this, all right? It doesn't matter how much money you make. It's how much money you have invested and how much money that you can tap into. It's your wealth. So the question would then be, let's say you've got $5 million. That you can change this question around and say, well, what are you going to spend your $5 million on? Or what are you going to spend $50,000 on? Or what are you going to spend $100,000 on? And you're like, I don't really know. And if you've got $10 million and you're getting a 10% return from these high commodity dividend paying stocks, you're making $1 million a year. What are you going to spend that $1 million on? It's not how much you make. That doesn't matter. It's how much wealth have you generated and how much income can that wealth throw off? That is where I think you want to be. I'm going to get to a point, hopefully, fingers crossed, where I hit that situation, where it's like, okay, I've saved all my life. I've made the investments. I've spent the time to figure out how to play the markets or how to invest in the markets to maximize my returns. And at some point, fingers crossed, I hope I get in that scenario where I'm like, oh, look, there's a Porsche GT3 RS. Should I go buy it? I don't know what I'm going to do with the money, because if I don't buy it, I'm just going to keep accumulating it and not spending it. That's the perfect spot that I want to be in, where you literally look at stuff and you're like, it doesn't even matter. I've got enough cash flow and enough wealth to really absorb anything. That's really the ultimate goal. The first goal is just to become financially free. I think I'm around there. Who knows? The second goal is to say, the money where it's so much where you're just like, I can do whatever I want, and you're not even really look at the price of things. That's, I guess, the ultimate goal if you can get there. Electric vehicles could have catastrophic consequences for grid reliability. Power electronic behavior of electric vehicles charging loads may create new risks of widespread power blackouts, according to the agency responsible for monitoring the U.S. electric grid. But I know, according to South Africa, that cuts emissions. So maybe we should all plug in some EVs. Let's just destroy the grid, shut that bad boy down, and you know what? We're saving emissions. Coming on down, we've got China reopening has sent oil prices higher yet, but hasn't set oil prices higher yet. But it has sent China oil demand much higher. 16.3 million barrels of oil per day seems like a high estimate from the IEA, but it's good to see China's continued oil demand recovery. Keep in mind, we are continuing to see higher and higher demand. And I know some people are going to say, well, how come we haven't seen it? Guys, we got to eat through the inventory. That's what we're working through. It'll get there. Grady, I like this post here, guys. I really do. It said, even before I called the commodities bear market low back in April 2020, I think platinum will outperform silver in this bull market. And if silver is a 15x from here, which I think, imagine where platinum would be if this ratio goes back to all-time highs. This ratio could go up 3 or 4x to get to the all-time highs, which means you multiply 15x times 3 or 4x. And that is where you get pretty ridiculous levels. 45 times increase, 50 times increase, whatever it is. But platinum and silver, I think, are both physical metals that I really like to hold. I think they both. Silver is the number 2 commodity in terms of its uses. Oil's number 1. And I think silver is far more valuable than what the price is currently in terms of its utility. And if it were to go missing, or if it were to go in a large deficit, we're going to see a big move in silver. Platinum is so rare, and it does have a lot of uses that cannot be substituted very easily. I think that could also do something crazy. So keep in mind, the platinum group metals, all those metals have done stuff that's crazy, and platinum's been the laggard. I think platinum's going to catch up, maybe even put some distance on the other metals, which is rhodium and palladium. And I think platinum could have a very good future. We've got China's importing 20% more oil so far this year than the first half of last year. That's good. We always have to remember with inventory, if something comes to the market and gets bought, that home is gone. Even if 50% of all the Airbnb homes come to the market overnight, if demand is stable, it doesn't even get us to the 5-decade average of active inventory. You know how hard it is to get this inventory all the way back up to this level? It's going to take a lot, guys. And if we've got the demand out there to soak up a lot of this inventory that does come on, it won't matter. It won't matter. And where the demand's going to go next is it's going to go to the home builders. They're going to build new homes and they're going to buy new homes. And that is where the expansion phase of real estate comes from. The people who say there's a housing market crash in America are wrong, in my opinion. I think we're going to go into an expansionary phase of real estate, and I think it's going to be massive in terms of how many homes that we have to build to catch this market back up. It's going to take years, and that's where your commodity bull market is going to be born. Okay, yeah, so I did this last time, but that's where I'm going to end it, guys. That's what I've got for today. And yeah, that's my opinions on what's going on. Throw me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And you can use the word discount in the coupon code if you'd like. And we've got a 5 p.m. Mountain Standard Time, Sunday, question and answer session for the members. We'll catch you next time. This is Finding Value.